recording has started. Um, Hello, everyone. This is Amrit Kumar, CEO of Altlayer, and this is All for You, a show where we discuss Layer 1s, Layer 2s, app chains, and Rollups, among other topics. Today, we have Perszyk, partner at Polychain Capital, one of the biggest venture funds in the crypto world, an investor in Altlayer. Welcome, Ben.
Hey, Amrit. Thanks for having me.
How are you, Ben?
Yeah, doing well. How are you?
Not too bad, not too bad. Well, welcome to All for You, and thank you for joining me. Let's start with a quick introduction for those who may not know you. Tell us a bit about your background, what brought you to the crypto land, your role at Polychain Capital, and what excites you these days.
Yeah, I took a little bit of a circuitous path to get here. I didn't have a background in, engineering or finance or anything like that. I studied philosophy in college. I worked at Airbnb for a number of years, but crypto was kind of always on my radar from the very early days. But I would say that my sort of eureka moment was reading the Ethereum white paper in late 2015. And that really kind of opened my eyes to, the wider breadth of possibility around what could be accomplished in decentralized networks. And I started thinking a lot about what we could do broadly with smart contracting and more expressive applications being built in permissionless decentralized environments. So that really sent me down the rabbit hole. I started reading a lot of white papers and kind of playing around with investing and trading early on, and ultimately made my way to Polychain in 2018. I started my time at Polychain working on the post-investment support side, so supporting the founders in our early portfolio with sort of strategic and operational questions. And then, as I kind of grew my networks and built relationships and stuff like that, started, kind of finding some additional research opportunities and made my way over to the investing side of the business. So I'm now a partner on the venture side of the business. That's where I spend most of my time. I've led investments across a number of different verticals, alt L1 ecosystems, DeFi, layer 2 scaling, interoperability, end user applications, so wallets, gaming, all that kind of stuff. So I've covered a pretty wide breadth, and most recently have kind of been primarily focused on some of the infrastructure stuff as well as gaming and kind of end user applications.
Before we go deeper into kind of your thesis behind some of these investments and other topics, do you feel like infrastructure is one sector that is kind of evergreen in terms of investment, especially it becomes more active during the bear market? Do you feel that way?
Yeah, I think that's been true throughout the bear cycles that we've seen. It was certainly the case in kind of 2018 and 2019, where a lot of people who come into the space with a lot of excitement during the bull markets tend to get shaken out or lose interest during the bear. So what we see is the people who stick around tend to be, these really sort of hardcore builders and developers, people who are really focused on improving the underlying systems so that when the next wave of people comes back in during the next bull market, we have better frameworks on which to build new applications, support more liquidity, more users, more activity, all that kind of stuff. That's a trend and kind of a contingency of people that or a contingent of people that I don't see going away, right? And I think something that I often have to remind myself of, but that I think is really true, is that we're still very early in this space, and we still are kind of building at the bleeding edge of technical capabilities. So there's a lot of people out there that are really trying to push that edge forward in terms of the research they're doing, the infrastructure and the protocols that they're building. So I don't think that we're anywhere close to sort of like an end state, and I expect that trend to continue for many years into the future. So I expect infrastructure to continue to be an investable category. Obviously, crypto provides some unique opportunities for the kind of collective ownership of the underlying infrastructure on which these protocols and end user applications are being built, and kind of builds in these value capture mechanisms. So I do think that infrastructure is going to continue to be an interesting place for new research, new development, and new investment for many years.
You're talking about the basic thesis around infrastructure. Polychain literally means multiple chains. So let's talk about kind of your L1 thesis. What was your thesis around L1s in, let's say, 2016, 2017, basically the post Ethereum era, when people were building scalable solutions and whatnot in those days? And do you feel like that has changed over time? Let's say in 2022 or 2023, when you see rollups coming up, how do you feel your thesis has changed from your initial days?
Yeah, I mean, I would maybe start by saying I don't think we're in or anywhere near a post-Ethereum environment. I think it's pretty obvious that Ethereum is still the
Yeah,
dominant
I mean
network
post
in terms
launch
of.
of Ethereum.
Yeah. I know what you mean, but I do think it's important, right? And I think that informs kind of the thesis around alt L1s. In 2016, 2017, I think the explosion popularity of Ethereum as a smart contracting platform and of the EVM kicked off this whole wave of research and development and innovation around layer one optimization. People started playing around with new consensus mechanisms, trying to optimize for certain areas that they felt Ethereum was not sort of delivering on, whether that was privacy or scalability or proof of stake, various economics designs, again, consensus algorithms, whatever it might be. I think a lot of that work was really valuable, and a lot of great new layer one technologies have been produced because of it. I would say the thing that has maybe informed our thesis going forward here has been the strength of the Ethereum community and the Ethereum flywheel, right? I think it's pretty clear at this point that while there are other competitive layer one ecosystems out there that maybe do certain things better than Ethereum does, they still have not quite been able to capture the level of engagement, of developer activity, of liquidity and end user sort of participation that Ethereum continues to enjoy. So I do think that there are still great opportunities both for builders and investors and users on ecosystems outside of Ethereum. I think that will continue to be true, but I think there's definitely a big hurdle to get over for those ecosystems to compete with Ethereum. The one thing I think is really interesting to observe here is the way that those other ecosystems have begun to adopt the EVM and incorporate EVMs into their own ecosystems, right? We see this on Cosmos, on Polkadot, on Avalanche. And I think that, that both speaks to the size and the engagement of the EVM developer community. It's a way for those other L1 ecosystems to try to attract devs to come build in their own ecosystems by saying like, hey, we can potentially offer additional kind of technical proficiencies, but we have an EVM that you're already familiar with building on and deploying on. And at the same time, I think, over a long enough time horizon, the proliferation of those EVMs and potentially their eventual interconnectedness might result in sort of a dispersion of liquidity, kind of originating from Ethereum, but then eventually moving outwards into those other ecosystems. So we're definitely still really interested in the work that's being done across these different ecosystems. It's been interesting to kind of watch these different L1s carve out niches for themselves, position themselves, try to attract new developers, and then also kind of incorporating some of what has historically made Ethereum so successful to try to make their bid for a competitive spot, moving forward.
And so, of course, I think in the last year or so, there have been a couple of, I guess, L1s that are popular as well, with a non-EVM, I suppose, runtime and environment, right?
Mm-hmm.
How do you see their future in some sense? I mean, without naming names, and do you feel like there's still room for, let's say, better runtimes, including, by the way, Wasm, for example? There was I think in 2017 there was a huge debate around, we should go and build eWasm, where you would compile Wasm back to EVM. Do you feel like that has somehow fail to attract developer attention, or do you feel like there's still room for people to build new runtimes that could be better in some way?
I think there's definitely still room for it. And I think that, as I mentioned at the top of this conversation, like we're very far from seeing a sort of stasis or endpoint in terms of technological development and capabilities. So I know there's a lot of teams out there that are still working on new VMs, new runtimes. I think that, as the space continues to mature and as people continue to find more expressive applications, new kinds of protocols or applications that they want to be deploying into these decentralized environments, some of those VMs, some of those runtimes are going to find user bases. They're going to find sort of core communities of developers. Some of them already have. I think the challenge is, again, the EVM has such a head start there. There are already so many developers who are familiar with building in Solidity and deploying applications to the EVM that, to me, it feels like kind of a good Trojan horse for other ecosystems to attract developers, and again, sort of invite them to come in and start learning more about the underlying tech stacks of their L1 environments, right? That being said, there's a lot of sort of unexplored technical capabilities that could potentially be unlocked by other runtime environments. So I definitely expect to see that trend continue. Whether or not they'll be able to attract sort of critical mass of developers and users remains to be seen. I think one thing that definitely has become clear is that simply building new technical capabilities or like new runtime environments is not enough to attract that critical mass, right? There's a lot of other work that goes into making an ecosystem successful beyond just the VM that they're working with.
And I also feel like, I've also kind of experienced this myself, right? Which is, if you talk about languages like Solidity and and JavaScript, for example, if you ask a web developer, they would, hate. I mean, they generally hate JavaScript, and yet it's the de facto language for web development. And so I also feel like these languages, these are not natural languages, but yet they have this social construct to it, right? Which is, you can't just say, okay, here's a fine language or the best language out there, and you could program in it, but it may not actually be accepted by the mass for some reasons. So it's more complicated than just, as you say, it's not just about being able to do something better from technical terms, but you need to build a lot of other things around it that makes language or runtime successful.
Yeah, I think that's exactly right.
And talking about, let's say, the Ethereum roadmap itself, right? Vitalik, I think, last year posted this end game blog post talking about how rollups would be the kind of the end game for Ethereum. How execution will move out of Ethereum, and all of that will go to L2s, ZK rollups in particular, right? And so, that's kind of one side of how he sees scalability's end game, while some of the other, I guess, people would, or critics would say that, for example, Hasib from Dragonfly Capital, he recently commented that Ethereum Foundation took the rollup route after years of research on execution sharding, only because sharding was deemed to be too difficult to implement. Do you agree with him that rollups are not an ideal scaling solution, and in fact a well-designed L1 could, including, by the way, Ethereum, right? If you had done a proper sharding directly on Ethereum, that would have been a better option. Would you? How do you position yourself on this?
Yeah, I mean, I think that progress is sort of made incrementally, and when you are in a position like the Ethereum community, the Ethereum Foundation is in, you don't have unlimited time to improve on the base layer capabilities of your chain. I think it's a much more pragmatic approach to, insofar as you're able to roll out improvements over time, continue to iterate and improve the capabilities that you're offering your community. That becomes more difficult as you have more users and more developers, right? Because you're asking them to sort of change their processes, their procedures every time. You're asking them to change things that they've become familiar with and environments that they're familiar with working in. But ultimately, that is the nature of sort of technological progress, right? So I think that Hasib is right to an extent that there are currently, and there certainly will be in the future, other L1s that maybe do have better, let's say, quote unquote, better technological capabilities than Ethereum. I also don't think that ZK rollups are likely to be the end point of this kind of push for technological progress, right? It's hard to imagine exactly what it's going to look like in another 10, 20 plus years. But I have to imagine that we will continue to iterate on these things and make more technological progress in terms of what's capable, both at the L1 level, at the rollups level, at the application layer, all that kind of stuff. So I think rollups are a great solution for the problems that we have right now, and they make use of kind of the most advanced scaling technologies that we have available to us, especially to deploy on existing layer ones. So I think it's a great intermediate step. I think ZK rollups have the potential to really unlock a lot of new use cases and a lot of address a lot of the scaling issues that kind of plague Ethereum as it exists right now. Do I think it will be the permanent end state of Ethereum's scalability questions? Probably not, but it certainly seems likely to me that it'll get us through the next, at least the next sort of bull cycle, and maybe persist even beyond that.
I agree with you. So let's move away from layer ones and infra. So when you look at, let's say, DeFi summer, right? Some would argue that since DeFi summer we have slowly moved away from fat protocol thesis to fat application thesis, and we saw that. We saw that how powerful some of these applications became. Uniswap, at one point, no one was really using it in that way. During that phase, Uniswap was the centerpiece of DeFi. Aave and Compound and other protocols, on lending protocols, they became pieces. So do you feel like, and that kind of became a little bit more apparent, when DYDX announced that they are building their own chain using Cosmos SDK. So would you consider yourself in the fat protocol thesis camp, or you are shifting towards a fat application thesis camp?
Yeah, it's an interesting question. I think I still am kind of in the fat protocol thesis camp. If you're going to make me choose as a binary, I think it's definitely possible that certain applications or app chains in certain ecosystems may eventually kind of outshine or achieve a larger market cap than the underlying protocol. But my gut is that it's not going to be the dominant trend. And I don't know that it's like long-term sustainable from sort of a security and economics perspective, right? I think that, the core component of this question is how well the underlying protocol, in this case, the layer one environment that we're talking about, captures the value of the economic activity that's being built and deployed on top of it. So, my sense is that if, for example, DYDX manages to reach a significantly higher market cap than Atom, right? That to me speaks more to a potential issue with the underlying value capture mechanism of Atom and the underlying sort of long-term economic incentives associated with holding Atom, staking Atom, participating in that the base layer protocol, than it does a broad scale shift in economics across the ecosystem, right? I might be wrong about that, but my sense right now is still that a properly designed layer one token should still be able to accrue more value than any individual protocol launched on top of it, or any individual application launched on top of it.
Let me ask you a follow-up question. Do you feel that Unichain is feasible, from a viable, let's put it that way? Do you feel that that's possible? There's a possibility of having Unichain, or what I'm trying to basically say is that if you have, let's say, some of the biggest applications, like DYDX, it's one of the biggest applications on Ethereum today, right? Mm-hmm. If some of these protocols start to move, or some of the major ones, do you feel like that becomes a problem?
A problem in what respect?
In problem of where because the value capture at L1 mostly would happen with some of these biggest applications out there, right? So for example, let's talk about Ethereum. And if some of these biggest applications become too big or they outgrow the underlying L1, does that threaten, no matter what value capture mechanism you have, does that threaten in some way the value capture mechanism that L1 has?
I think it certainly could, right? Because ultimately, in the way that the kind of blockchain stack works right now, those applications tend to rely on the economic security of the underlying chain to prevent sort of existential attacks from being carried out against those applications themselves. Now, that I suppose can change to some extent, depending on the architectural level changes of other ecosystems, right? And I think, ultimately this is kind of what Cosmos and like the app chain sort of thesis is ultimately trying to drive towards. I think this question also becomes even more complex when you start to introduce like modular blockchain architecture, where ultimately components of those tech stacks are kind of being cherry picked and drawn on by individual applications. It's an interesting thing to speculate about, but the reality is these are relatively very new structures, very new environments in which to deploy these new applications. And I think it's going to be actually really difficult to predict exactly how that's going to play out on, a 3+, 5+ year timeline. So yeah, as I said, I'm still kind of in the fat protocol thesis mentality, both in terms of like how we've seen those trends shaping out so far, and also with the way that the security models tend to currently be designed. But I may have blind spots there. They're certainly open to having my mind changed as we start to see more of these application-specific chains roll out and see how they manage to capture value for themselves, how much of that value gets driven to the underlying ecosystems, and ultimately how the end users, both the kind of benevolent and malevolent ones, end up interacting with them.
And, there's some people, even talk about fat, wallet thesis these days. Do you give them any merit? Do you feel like wallets are, because they are an entry point to the ecosystem of any sort, they will also have a potential way to capture a lot of value through users coming in? Do you believe in that thesis as well?
Yeah, I think
that's a thesis. It's a way.
Yeah. No, it's something that I think a lot about, because I think actually like end user asset management is a huge problem in the space, and one that up until recently, I would say most builders have been, with varying degrees of willingness, kind of willing to accept that like it's an issue, but we're dealing with people who are here and know how to manage their tokens, manage their assets, sign transactions. Usually that means people managing a bunch of different wallets, combinations of software wallets and hardware wallets, and multi-sigs and all that kind of stuff, managing assets on a bunch of different chains, different protocols, all that kind of stuff. That's a complicated user experience, and it's one with a really high barrier to entry. And I just don't think that we can reasonably expect mass adoption at the retail level if that's the experience that we're requiring people to engage with if they want to enter these ecosystems. So I think there's a huge opportunity out there for end user asset management products that are more expressive, that have better UI and UX, and that sort of unlock a lot of the capabilities that we all take for granted across the ecosystem, right? So I think allowing users to, for example, sign transactions on different chains with one set of keys is a huge opportunity, really valuable. Allowing users to interact with different protocols and assets, both fungible and non-fungible tokens, on different protocols, on different chains, natively from within the app, kind of give people the opportunity to stake and trade and lend and bridge, all that kind of stuff, from sort of like a wallet front end. All of these things are really valuable and I think really improve the end user experience. And anytime you're offering that much of an improvement over the existing user experience, I think there's a massive opportunity to capture value there. We haven't really seen anybody like actualize on those potentials or capture those opportunities. So I think that's I know that that's a space that a lot of people are working on currently, and I expect that in the coming year or so, we're going to see a lot more wallets and applications that are designed to kind of address a lot of these challenges and build out these products and these features for end users. I think that the earliest entrants to that category are going to be able to attract and retain a significant user base, capture a lot of value from it. The question then becomes, once that space becomes more crowded and more competitive, will those wallets, those applications be able to continue to monetize on them, right? I expect that we'll probably see some amount of fee compression happening. And then, at that point, those teams are going to have to get a little bit more creative on how they're capturing value from users entering this broader ecosystem through their wallet application.
And do you feel like those people who would build those, let's say, wallet, next gen wallet that is easier for people to use? Do you feel like we who are here in the Web3 world, are we so complacent and used to these complex wallets that we would have a hard time building a more usable solution? Or do you feel like we have 2.0 guys to come in, who have worked all their lives in user experience and building better HCI, human computer interaction tools? Do you think that we need a little bit of help from that side as well?
I think it would certainly benefit. I don't think that there's a lack of capability in the current developer ecosystem. I think the reality is what I'm describing sounds intuitive, but is difficult to build because of the nature of crypto, right? You're having to sort of find this really delicate balance between maximizing security for the user, people who are sort of self-custodying assets, managing key material, interacting with complex protocols in a way that is immutable, right? If you make a mistake, you don't get to undo it, regardless of how good the front end is. So there's a balance to be struck between, preserving the security and also, on the other hand, sort of building user interfaces that abstract away as much of the complexity as possible and help guide users through a flow that isn't intimidating, that doesn't require a huge amount of background knowledge into how these underlying systems work in order to be able to interact with them. And that's a really difficult problem to solve.
Indeed. I mean, if you look at passwords, it took quite a while for people to get used to passwords, and we are now giving away people private keys and public keys to manage, which is of course a nightmare. So yeah, I agree with you. There's a balance around security and UX that needs to be very carefully thought. You need to carefully think about those parts.
Yeah.
And sorry, go ahead.
The one thing I would add to that as well is like that's really just talking about sort of the retail or like end user experience, right? I think there's an additional opportunity, and I know again that there are teams working in this space, but there's an additional opportunity to build better tooling for developers, people who are deploying protocols, and giving them sort of more expressive asset management, key management capabilities, right? Better permissioning systems, better identity systems, better sort of like key sharing or key sharding systems that sort of allow developers to build in these more expressive capabilities into the actual core protocols themselves. And hopefully that will both make things easier for people to deploy and manage protocols on an ongoing basis, and then also sort of improve the security of those protocols and improve the end user experience as well.
Yeah, and the good things are, there's some work being done, as you said, people are working on account abstraction, people are building MPC wallets. smart contract wallets and so on. So I think some of these things are shaping up slowly, and I think maybe in a few years' time we'll have probably better wallets than what we are used to today, I suppose.
Yep, agreed.
Moving to we discussed a little bit about app specific solutions. We discussed a little bit about Cosmos. You recently invested in Altlayer, and we are very proud to have you as an investor. What is your thesis around app specific rollups, for example?
Yeah, I think again it goes towards this idea of constantly improving sort of the expressiveness, the flexibility, and kind of the dynamism of the tool set that we're giving to developers, right? And so giving developers enhanced capabilities to, whether it's manage assets or in this case, manage traffic and volumes and all that kind of stuff. The more tools that we can put in the hands of developers, the more interesting and expressive applications we're going to see being built and deployed in decentralized environments. So for me, the concept of having sort of application-specific rollups is an interesting one, because I think it just puts another really valuable and powerful tool in the hands of developers. It allows them to customize the way that they want to build and maintain and manage protocols on an ongoing basis. It allows more flexibility in terms of both cost and throughput for those applications as they see, volumes and traffic changing, developing over time. I think it just improves the sort of core functionality of the tech stack that we're building on in a way that will ultimately make for better development experiences, better end user experiences, reduced costs, reduced settlement times, all that kind of stuff.
And this is kind of a follow-up question. Again, I have my own thoughts on this, and unfortunately, none of these application-specific rollups are fully live yet in the true form of it, including Altlayer. We're still building. But here's a question that I would love to kind of pick your brains on. So, imagine if these rollup providers, for example, including Altlayer and other that exist in the market, if they start offering these highly customizable rollups, where dApp can use its own token for gas, for example. How did their own token, which I assume at some point they might have a token, right? So how do you think their own token will capture value? Do you feel we might see a Cosmos style kind of no cap? I mean, right now it's changing in Cosmos as well. But do you kind of see a similar scenario, or do you think these projects will learn from Cosmos and say, okay, there has to be a better value capture mechanism? You can't have independent sovereign rollups without the token playing any part in those systems.
Yeah, I think that's it's a really interesting question, and again, it kind of remains to be seen, right? I think it's another scenario where the first entrants into this category will have an opportunity to capture value with their own tokens, and then it will kind of depend, right? We'll see how developers end up using these things. We'll see how other entrants into this category end up handling their own economics. Some of these sort of application-specific rollups or rollup technologies may end up kind of in the realm of just like common public goods that anybody can make use of. And in that case, the developer teams are going to have to think really deeply about like what is the role that a token might play for a project that's building these kind of application-specific rollups, right? Is there a role for a token in that system? And if so, what capabilities does it afford, and how can it capture value based on the capabilities that it grants to the developers who are using it? I think that the benefit that we have now is kind of looking back on 7, 8+ years of various different token economics designs, seeing what's worked and what hasn't. If we get to a place where, for example, the application is able to pay gas fees on an application-specific rollup in their own token, there may still be opportunities or mechanisms that those rollup developer teams can employ to capture some of that value, right? Maybe they end up taking some of that value in the native application token, and swapping it, converting it, burning it, issuing it out to their token holders in kind, or again, converting it into a native token, something like that, right? All of those possibilities will depend on the different capture mechanisms, the liquidity of the sort of exchange pools between those native tokens, et cetera. I think there's a lot of opportunity there. It's a very early design space. There's a lot of different avenues to explore, but I don't think it's anywhere near a settled question yet.
I agree. I mean, this is something that we have been discussing internally as well. And one thought that we had, again, we have not finalized any of the bit yet, but we do have, for example, let's say multiple sequences that we run for each rollups, right? And these sequences will have to have some security guarantee, right? Because if they turn malicious, you need to make them accountable.
Mm-hmm.
And so that could, for example, come from the token of the rollup provider, and then somehow there has to be a way where a part of the application fee has to go back to these sequences, because they have to be incentivized in some way. So for example, a portion could come from the other way could be it could be a mix of these tokens. So for example, you could say, let's say 50% of the token has to come from, let's say, the platform token or the rollup token, and 50% of the token could come from the application token. And so now both parties are incentivized in some way to maintain the rollup in some way.
Yeah.
But anyway, again, as you say, these are very early design discussions, and it will take a bit of time for us to, and I guess the space to come up with these tokenomics as well.
Yeah, agreed. I mean, there's a lot of different levers to pull. I think the challenge is always, again, striking this balance between the value of the offering that's being made, and reducing the complexity and the friction on the user. In this case, the user being developers, right? So making sure that there's an economic system that properly aligns incentives and drives value where it needs to go, or captures value in the way that it needs to be captured, in order to provide security, or even just kind of operate the network and make sure that transactions are getting through, on the one hand, and on the other, trying to make sure that as a developer using these systems, you're not introducing so many additional steps, frictions, complexities, et cetera, that they just say forget it, it's not worth it.
Indeed.
Yeah.
Now let's move a little bit away from rollups and sort of try to be broader, maybe. So what are some of the areas in the crypto space today where you see interesting projects being built by developers? It could be DeFi, it could be infrastructure. What are the other areas beyond rollups and layer ones and layer twos?
Yeah, I mean, there's a handful that, to be honest with you, haven't actually changed that much over the years, because again, there's so much new research and new development being done in a lot of the same kind of historic categories. Scaling is obviously a big one. For me, I think privacy is a big area of interest. I think there's a huge opportunity, and it's sort of a critical issue in the space right now around privacy. Ultimately, if blockchains end up just sort of becoming these massive financial surveillance networks, I would consider that a sort of systemic failure on our part, right? I'm really excited about a lot of the work that's being done in the zero knowledge space, both at kind of the application layer, the infrastructure layer, and also at the base layer. I think that bridging and interoperability is still a really important area. Again, we talked about this a little bit at the top of the call, but I think that unlocking cheaper, more reliable, more secure value transfer between ecosystems is generally a good thing for everybody. I think it, when done correctly, will improve liquidity and reduce fees across all of these different ecosystems, and unlock a lot of new interesting applications and capabilities. I think that we covered wallets and sort of asset management in depth. I think that's another super important place, or sort of category. And ultimately, end user applications, I think, is also a really important category, right? DeFi, I think, has a niche of users. There's a ton of value in having these sort of permissionless, highly liquid markets that never close, that no one can sort of turn off, and that support a really wide variety of assets and asset classes, long tail assets, liquid tokens, NFTs, potentially real world assets. There's a lot of people working on that, et cetera. But at the same time, most retail users right now in kind of like the Web 2 world or like the existing financial system have very limited interactions with the broader financial infrastructure, right? It's not an area that most people spend a ton of time thinking about or interacting with. So, thinking about, okay, what do end users end up actually using, and what do they want to use, and how can like building and deploying end user applications in decentralized permissionless environments unlock new behaviors, unlock new capabilities, new business opportunities, whatever it might be, right? So gaming, I think, is a huge one. It's a very interesting category that I think dovetails really nicely. We've seen a lot of work being done on like decentralized social media protocols, streaming applications, storage, compute, all that kind of stuff. I think there's a lot of really interesting possibilities in that broader category as well, and I think that's going to be a really important one if we're serious about sort of onboarding, a mass adoption wave.
Kind of extension of this question is, we saw, for example, back in the day, ICOs were one crucial factor. You can call it ICOs, you could call them investments, right? But ICOs were one way that brought a lot of blockchain users, quote unquote. But then we saw DeFi that really brought users. You could actually see TVL going up. People started to play around with it. Uniswap, basically was doing more volume than Coinbase at some point of time. Mm-hmm. What would be a sector that you feel could bring? And recently in NFTs were the one. At some point, I think I saw a report from Electric Capital saying that the newer wallets that have come up in 2022, the first interaction that they did was, in most cases, was an NFT transaction rather than a DeFi transaction, right? So 80% of new wallets did a NFT transaction first. So what do you think would be the driver for the next batch of new users? Would it be gaming, you feel?
I think gaming is a serious contender. I think that, there are some really major opportunities to kind of gradually invite people into crypto ecosystems using games as kind of a Trojan horse, right? And I think in general, we haven't really seen that work yet, primarily because the kind of crypto games that have come out so far have largely been, experiments, like token experiments or NFT experiments with the kind of game skinned over them. And generally the games themselves have not been all that fun to play. They've attracted users because there's like a clear and immediate financial incentive, right? And we've also seen that as that financial incentive dissipates, so do the user bases of those games, right? That's, if you're speaking from sort of a traditional gaming perspective, that's a huge problem, right? One of the big questions that sort of AAA studios or even like fast casual games are trying to solve is this idea of player retention. And I think in order to attract a significant base of users, players, and retain them over time, fundamentally, you just have to have a good game. You have to have a fun game that people want to play on its own terms for its own purposes. The economics of it should, I think, reinforce those core game loops and sort of create a gaming experience that is more immersive, more expressive, allow for kind of like emergent economic behaviors around it. But it should not be the primary focus, right? So I think there's a lot of interesting work being done now where, we've seen a certain amount of attrition from sort of existing AAA game studios into the crypto space, people who are trying to build games that replicate the feeling of, existing AAA categories and titles, and building in new, incentive structures, digital asset ownership structures that are, effectively crypto primitives, right? So I think that as an offering is really compelling, and I think there's a good chance that that kind of format, that kind of setup, is a great way to onboard a lot of people into this ecosystem more gradually, right? By saying, come play the game. You don't have to know anything about crypto. You don't have to own any tokens in advance. You don't have to have a wallet. As you play, maybe you accrue tokens, maybe you accrue in-game assets, cosmetics, items, whatever it might be. And by the way, like if you want to own these things meaningfully on chain, take them outside, trade them, whatever it is, that you might be looking to encourage through your game, we can kind of guide you through the process of minting them, setting up a wallet for you, encouraging these in-game economic activities. The end result is that I think a lot of people end up sort of de facto familiarizing themselves with the concepts of digital asset ownership and asset management and having wallets and all that kind of stuff. But it's not like the first thing that they encounter when they're coming in, right? So from a user onboarding and user experience perspective, I think gaming actually has potentially a lot to offer there.
And in terms of fully on-chain games, what are your stance on that? So do you feel like there would be good and decent fully on-chain games as well, or do you feel like it's mostly going to be kind of semi on-chain games or on-chain games where mostly games where basically NFT assets are tokenized in some way? Game assets are tokenized.
Yeah, my sense is that probably it's going to be more of the latter, just because games where every action that a player does are on chain means that there just is like there are limits on the style of play, the pace of the game, the cost of running that game and initiating those transactions, and again just demands a certain amount of kind of technical familiarity with managing assets and interacting with blockchains. I don't think that they're well suited for games that will have really massive user bases and like more complex core game loops, right? It'd be very difficult to say run a game like Call of Duty fully on chain, right? And it wouldn't make sense to do so. I don't think that it would meaningfully improve the experience of the game. So I think much more likely is that we'll see games being built and deployed in kind of existing game engines, Epic or Unreal or whatever it might be, with an economic component attached to it, where users are then earning NFTs, creating NFTs to contribute them to the game, earning tokens or exchanging tokens. But those transaction components will be much more sort of ad hoc. The core game engine, the core game loop will not rely on settling to a blockchain every time users take an action.
Right. Okay, let's talk a little bit about crypto and crypto startups, right? Or crypto startups and valuations. So just about a year ago, valuations in the crypto world, seem to be pretty high. For someone outside and also inside, people were often talking about crypto valuations. Was it also a low interest rate phenomenon, as Elon Musk would say? How do you see the valuation these days? Do you feel like the valuations are getting a reset in the last few months or years?
Yeah, to an extent, right? I mean, obviously, the kind of venture capital boom that funded a lot of the Web 2 sort of tech platforms that we're all very familiar with now certainly was enhanced by the low interest rate environment, following the 2008 financial crisis. So you can't fully separate those things out, right? At the same time, crypto has always been a pretty volatile asset class. We've seen significant bull and bear markets in the past, and the public and private market valuations tend to lag, sorry, I should say the private market valuations tend to lag the public market valuations by a couple of months, but they definitely respond in kind, right? So I would say right now, we've definitely seen private market valuations come down. It's definitely a more challenging fundraising environment for new founders and for existing teams to raise later stage rounds. But it's also still happening, right? There are a lot of significant funds in the space at this point that have raised significant amounts of capital, and they're looking to deploy. I think that the smart ones are kind of seeing this as an opportunity to be aggressive and to continue to sort of double down in specific projects or categories that they find align well with their theses. So I think it's more challenging now. The valuations are lower, but it shouldn't be a period of sort of despair or discouragement for people who want to go out and raise money and build new protocols in the space.
Right. And so, if you compare, let's say, maybe the Web 2 world or the traditional VC space, right, there are somewhat set ways, I suppose. I mean, not really set, but there are some ways, or say there are ways in which you can value a certain startup in a traditional world. How do you, as a VC, value a crypto project today?
Yeah, that's a great question. The unsatisfying answer is really that it depends on the project, the market that they're trying to deploy into, the category that they're building in, and ultimately, like, how we sort of mentally categorize a specific project in terms of value capture models, or like what the sort of business is, right, at its core. The model for kind of assessing the valuation of a DeFi project is going to be different from a new layer one. It's going to be different from kind of an end user application. So, a lot of it comes down to trying to really deeply assess, okay, like, who are the founders? How well do they know the area that they're building in? Are these the right people to build the project that they're trying to take on? What kind of experience do they have? What kind of background do they have? A lot of it comes down to, assessing the risks, right? And there are a variety of risks from, execution, technological, regulatory, et cetera. And obviously, the earlier you get in, the more you have to sort of build in those risks into your valuation model. There's, certainly a component of we just have more kind of historical information, right? I think, the DeFi summer was a great example of kind of watching this cycle of private market valuations into public market launches that kept sort of pushing each other higher and higher. And then, we'd see kind of a shorter and shorter timelines to the sort of boom and bust of the market caps of, a lot of these new emerging DeFi protocols, because, they were able to build a lot of hype. Maybe they were able to sort of vampire attack an existing protocol and attract a lot of initial liquidity, pay out really high yields early on. But ultimately, those economic models were not sustainable enough to support that protocol over the long term, right? So a lot of it involves really getting into the weeds around, like, can this protocol, if it works the way that it's being laid out right now, is it long-term sustainable, right? And do we expect these value capture mechanisms to persist in the future, continue to capture value? What happens when they are, when the environment that they're launching into becomes more competitive, all that kind of stuff. So there's definitely like a structured way of sort of moving through all of these different items. But, at the end of the day, a lot of it kind of comes down to looking at historical examples, kind of working through different financial projections, and then making sure that on a core, like really basic level, you're doing your diligence, making sure that you know your founders, making sure you know who else is on the cap table and what the financials of the business look like, and how much of what they've currently raised do they have left, and what are they spending it on, and how are they sort of running the business internally. All that stuff is obviously super important as well.
And talking about some of these startups that have raised, let's say, just before the start of the bear market, right? And we saw that over the last few months, several crypto startups had to shut down for lack of product market fit, but also due to, I guess, a shortage of capital, because they raised right before the start of the bear market, and now it's a year and a half has passed, and now they are, they have crunch of capital, right? And the situations with 3AC and Terra, and that didn't help either, right? Because there was a contagion in the market, and it was very difficult to do fundraise. Do you feel like more startups would call it a day in the coming months? We are seeing people, some startups actually, I think it was today or yesterday that Magic Eden, decided to let a lot of people go. Do you feel like that's going to continue where, you'd see a lot of startups calling it a day and say, okay, we are run out of funding and it's very hard to fundraise these days?
Yeah, I think ultimately, just like we're seeing in the existing Web2 tech category, I think we're going to see a lot of teams who raised large amounts of money, grew too quickly or sort of too ambitiously, and failed to, produce meaningful revenues and are not able to sustain themselves on the revenues that they're generating, if there are any, and then finding themselves in a position where they raised rounds at really high prior valuations that they can't really justify when they go out to investors now. So there's certainly a lot of teams out there that are finding themselves in this difficult position of, maybe having to raise a bridge round or even a down round, maybe not even being able to do that, and looking forward at a macro market that is still sort of dominated by uncertainty, right? It's really not clear at this point what's going to happen with interest rates here in the US over the coming months or year. It's not clear what's going to happen, in the broader global macro markets. And I would say that, if those teams don't have the runway to kind of get through this period of uncertainty, certainly we're going to see a lot more of them, laying people off, taking drastic measures to try and reduce burn and kind of go into survival mode as much as possible. Some will be successful and get through it, and certainly some will not.
And it's talking about VCs themselves, right? There was a lot of criticism towards VCs recently due to the FTX incident. What have we learned from the FTX saga, and how can crypto VCs do better from your point of
view? I happy to answer this. I do have to run. I've got an interview that I've got to do, but I'll answer this last question. Yeah, I mean, I think that, I think it's a little bit more complicated of a question than most people want to make it out to be. I think that there were certainly a lot of red flags around that situation, and that, there's a lot of investors that could have been sort of more scrutinizing and done deeper diligence, really looking into, again, the cap tables and the finances of the business that they were investing in, especially at those later stages, trying to get a clearer picture of how the business is being run, how internal funds are being used and managed, and what kind of accounting systems are being used to track all of this, auditing systems, et cetera. I think there are certainly some folks out there that maybe didn't do that level of proper diligence. On the other hand, if you have a founder that is obfuscating that information, not providing it when it's being requested, or blatantly sort of misrepresenting the information that's being provided to investors, that can be a really difficult thing to get around, right? If you have somebody that's, just hiding information or giving you false information, I don't think you can really fully blame people for acting in good faith on what's being provided to them. So I think it was kind of a mess on both sides ultimately. And I think that, my hope is that more investors will just slow down the process, make sure that they're doing really deep diligence. And if you get that feeling that something isn't quite adding up, or you're seeing red flags, trying to really take those indicators seriously, and not just getting blinded by FOMO or kind of the hype cycle that's surrounding a certain project. I would also just point out that this is obviously not a phenomenon that's unique to crypto. We've seen this over and over again in kind of traditional venture. So it is definitely one of the risks you take as a venture investor, but I think it's incumbent on every one of us to try and mitigate that risk by doing as deep as diligence as possible.
Well, thank you very much, Ben, for your time, and it was lovely having you here. So thank you very much, and
Yeah.
hope to see you soon again.
Yeah, thank you, Amrit. Take care.